My notes. I'm old school, so I like to have notes. For those of you that weren't with us on Wednesday morning, just a quick background. My name is Kimberly Hebb. In a very former life, I was a banker, and then I was with the OCC for 20 years. I was the director of compliance policy, and then I decided to jump out of that gig and became the chief risk officer for Bilgo, which is a pretty large payments fintech in this space, and I built their ERG from the ground up, and after about 3.5 years, I decided it was time to sleep a little bit instead of 100 hours a week, someone who's been there. And so I went out on my own, and I do some consulting work, and I'm also now a co-founder and CRO for Balance Trust, and our company provides automated solutions primarily for banks that want to get into BaaS programs so that they can risk assess, vet, and monitor the fintechs that they have relationships with. And so today, though, one of the things we're going to talk about is, how can a fintech influence the oversight and governance process that they find themselves subject to? And what we see here on the slides is these are the types of areas that bankers and fintechs should be considering on how to inform their programs, when they're developing products and services, when they want to think about how to align their tech stack, and also when they're considering engaging with different types of third parties. And so the first one up here is simple, straightforward laws and regs, federal laws, but also think about some state laws. I think when you think about risk assessments, risk management in the compliance space, probably the biggest difference there that is often sometimes left off the table are privacy laws, right? There are some pretty onerous, depending on who you talk to, federal privacy laws, and everyone's pretty familiar with the CCPA in California, which decided that federal didn't go far enough, and so they wanted to have some more requirements. And since then, there are a handful of states, including Colorado, Virginia, Utah, Delaware, that have implemented this year their own privacy laws that said, hey, California, I see you and I raise you this. And so depending on where your footprint is, from either a bank perspective or a fintech perspective, this is a place where you really need to look outside of federal. Supervisory guidance. This can be issued directly from a regulator or interagency. In this space, it's most often FFIEC, the Federal Financial Institutions Examination Council. About 6 weeks ago, interagency guidance came out from the OCC, the Fed, and the FDIC on third-party risk management. Basically what it did was clarify for everyone in this space is that everything that's been said about vendors since 2013 and has had FAQs up and through this year is completely expected for any type of third-party relationship, whether that's a fintech customer, a fintech vendor, a fintech client, a fintech relationship, pick a word, whatever you want to call that relationship, it extends to that. Another place that is a really good idea to look if folks aren't familiar with it is FinCEN, which is the Financial Crimes Enforcement Network. It's the FIU for the US. They put out advisories and 3 times a year a document called SARS by the numbers. And it talks about the different types of typologies that they're seeing and being reported for money laundering and fraud and other types of suspicious activity, including identity theft, account takeover, those types of things, so that you can stay abreast of the types of schemes that are happening within your line of work and within your rails. Obviously, you're going to have sponsor bank requirements because if you need a relationship with a bank, you're going to have to play by their rules to a certain extent. And then enforcement actions and litigation. Public enforcement actions are honestly done to set an example. Before an enforcement action becomes public by any regulator, unless it's the most egregious act on the face of the earth, there are about 4 or 5 different steps that have happened over probably 2 to 2.5 years that were informal. And the bank either refused to or failed to comply. And so that's why it's become public. So take a look at those. Don't change anything about your program based on that, but look at why that entity got in trouble. And then look at your own program and see if you have similar gaps or similar issues or reliance on certain things. So, what prompts changes to oversight and governance in this space? When we think about from 2000 until about 2015, 2016, it truly was an evolution, right? Slow and steady with respect to technology and new ways to do things in this space, and people calling themselves Fintechs and wanting to do this new thing in this space that banks had already done. And at that time, there were a handful, right? Everybody was sort of flying under the radar at that point. Well, go from 2016 until today, we went from evolution to revolution, right? Now, the numbers have just multiplied exponentially of players in this space. As an ex-regulator, I just laugh every time I hear a new word, right? Neobank, challenger bank. You're not a bank. It's a word you made up to make you sound like you belong in this space, right? And fintechs, pardon me, are very good at creating these words, right, that are not defined anywhere. So it's kind of hard to challenge them. And then it's kind of also not hard to challenge them because they're not defined anywhere, right? And so because this has happened, you have an increased adoption equals increased awareness means increased oversight, right? If I had a dime for every time somebody at BillGo or a fintech that I'm currently working with said, well, when I was at insert company name here, we never did this. No one ever asked us about this. That's because no one knew you existed. Okay? Now people know you exist. People know companies like you exist, right? And that's why the regulators are starting to take a look. The other way that things change is through consumer harm, right? When you're talking about complaints, not only can a consumer or a merchant complain directly to the bank or directly to a fintech, they have the ability to complain directly to a regulator, right? And so that could be the bank's regulator or it could be the CFPB. And the CFPB's complaint website is public. And if you are not out there periodically looking, you should. Now, if your name as a fintech comes up, the CFPB will reach out to you and ask you to address it. But you should go out there and take a look at things for companies like you to see what is happening and what are complaints. Because if you're not looking at it, I can guarantee you that the one type of entity that is are attorneys who are looking for class action instances. Okay? The same thing with respect to reporting to regulators can have some change. And I think two big examples here are, with respect to consumer harm, GLEBA, the Graham-Leach-Bliley Act, right? Before that, the primary reason it was passed, which had to do with data use, sensitive data use, and sensitive data security. It's because folks were using people's data without their knowledge and in ways to profit off of it. So this law was created in reaction to that, right? I think probably the other biggest example that at least bankers are very much aware of is the USA Patriot Act. Prior to 9/11, for a significant number of years, the regulators were trying to put into place KYC, or Know Your Customer, requirements for account opening at financial institutions to increase transparency to hopefully limit, lower, capture potential money laundering or other suspicious activity. And every lobbyist in the world, bank lobbyists, financial institution lobbyists, merchant lobbyists, retail, were all pushing hard against this. Then 9/11 happens. Then the USA Patriot Act in 9 months, the quickest any law has ever been put in place. And the transparency section for financial transactions, for customer identification program, customer due diligence, and enhanced due diligence of that law made KYC that everyone hated and was pushing against, it dwarfed it. It looked like it was on steroids, right? So sometimes it's better to do the right thing instead of pushing against it, because then you're going to have something else sort of pushed down your throat. There are two ways that a fintech in this space, and a bank for that matter, can have an impact. And the first is just be a bad participant, right? Within the financial transaction industry. You know, there's two ways or two reasons that you're a bad participant in this space. One is that you're ignorant, or it's intentional, right? There are a lot of brilliant engineers, product people, dev people in the fintech space that have zero banking, zero payment rail experience. So sometimes they just don't know what they don't know. I was at BillGo once, and I had this engineer, and he was so proud of himself. And he asked, to have a one-on-one meeting with me to describe how he was going to help us, make things more efficient and more effective. And he started to walk through some stuff, and I looked at him, and he goes, "But no one's ever done this before." And as he finished, I said, "That's because it's illegal." Right? And he just didn't know, because he didn't know the laws behind it or the intent behind those laws and what they were, trying to protect and prohibit. And then they don't know, but they don't care that they don't know, right? A lot of fintechs, and it's the nature of the game, they want to fail fast, right? Run hard, run quick. If it's not right this week, we'll get it right in the next scrum, and we'll keep going and going and going. And, a little further down on here, one of the quickest ways to give a bank compliance officer an aneurysm is for the fintech to tell them, "We're not going to ask permission, we're just going to ask forgiveness whenever you figure it out, or whenever the regulators." And that has a very different meaning in the banking world, right? That means that there's some violations, that means you're going to have to talk to your board, that means that you're going to have to get more resources, and one of those might be replacing you because you let it happen, right? The other aspect is really understanding what is applicable versus what is not applicable to the fintech, right? We hear a lot, "I'm not a bank. I don't meet the definition of a bank. I don't meet the definition of a financial institution in the BSA or in Reg E or in this." There's one reason why. The law has not caught up. That's it. And not to get political, but depending on what happens next year, the law will catch up, right? And so don't change any of your programs now, but keep this in mind and be thinking towards, what was the intent of that reg, right? What was the intent of the law? What is it trying to protect, promote, prohibit, and build to that standard, right? You may not meet the definition, but do you want to maintain the integrity of the financial system that you're participating? It's definitely going to help you stay in good graces with your bank, right? And the other aspect of that is there are approximately 44 federal laws that are either BSA, AML, OFAC, or consumer protection. That's how they're categorized. And when a fintech hears this, if they don't have experience in this area, what they hear is, "Consumer, I do B2B, tap out, I'm done." And of those 44, there are about 18 that cross over and are just as applicable to commercial transactions. And there are a handful of consumer regs, Reg Z is one, that depending on what you do, especially in the credit card space, there are credit card provisions that extend specifically to commercial customers. So these are the types of things that you either need to get involved with someone that you know and that can do something for you and help you out, or talk to your bank about it. The other aspect is do what I say, right? So there is a fintech, I will not mention their name, but there are currently several class action lawsuits against them because they disclosed that they were going to do one thing with data, and then they did a different thing with data, right? So You can build a program. You can have the documentation. You can say what you think the bank wants to hear, what you think the regulators want to hear. But if you don't do it at the end of the day, it's going to jeopardize your bottom line, your sponsorship with the bank, your reputation, and legal fees at the end of the day. So let's pretend no one's going to be a bad participant. So let's now move over to how can you be a good participant, right? And so the way that you do that is really understand where you fit within the ecosystem, right? You're a fintech. This is a quote actually from Wade Arnold, who is the CEO of Move, and I was in a meeting with him the other week, and he said that too many fintechs forget that fin is in fintech, right? And it's the first part of that word. And so you have to just truly understand that what you're doing is providing financial services, supporting financial transactions, whether it's for consumers, for commercial entities, for merchants, for intermediaries, other aggregators, but understand that. And so don't run from it, embrace it, understand. And then pick your battles with your sponsor bank. So the one thing, once you understand who you are in the ecosystem, build your own program, right? Determine what's applicable and have the right story so that when you have a conversation with your current sponsor bank or any sponsor bank that you're seeking in the future, regulators, auditors, why you made the determination that this was applicable to your product, this law, this one wasn't, and how you're going to support that. And then build your program around that. Because what you want at the end of the day, with respect to your sponsor bank, is to have a program that will be compliant with their requirements. Because if you don't have a program, then they're going to tell you how to build it. And the one thing, we said before, how to give your compliance officer an aneurysm at a bank, how to give fintech dev guys an aneurysm, is for you to tell them how they should build their product and their program, right? So get ahead of the sponsor bank. Do it. So they don't have to tell you how. But learn how to pick your battles, right? Especially with compliance functions that are going to be delegated to you. Maybe that's client onboarding, KYC, CIP, and OFAC. The bank's going to have requirements, thresholds, right? Timing of when it should be done, the types of data that should be reviewed, how it should be reviewed, reporting back. You have to remember that if you're using that bank as a sponsor, they are extending their charter and their license and their access to Rails to you. So you do have to play by their rules. Now, if something is going to make you change your product as a whole, be a ridiculous amount of resources, then maybe that's not the sponsor bank you want, right? Maybe you need a different sponsor bank that has experience dealing with your product. Or maybe you just don't have the right framework around your product and every sponsor bank is going to ask for it. And that goes back to understanding what is applicable to the types of services that you're trying to provide. The last part is, this is generally where it gets to the finance guys within a fintech. Compliance, risk management, due diligence should never be seen as check the box, we have to do it for the regulators or the bank. This should inform pricing and whether or not you even want to bring on downstream merchants, right? Because one of the things is you want them in the door, but how much is it going to cost you to onboard them, to vet them, to understand their product, to monitor them? And are they going to be around 12 months from now, right? It might be great revenue for 3 months, but after that, is their money going to dry up? And what have you spent up front to onboard them? So this is a good way to sort of weed out at the beginning and have that program built. We're cooking with gas. The last thing that I wanted to talk about up here is different ways for fintechs to get involved. Banks can as well, but most bankers in this room know this already. One is how to stay informed one way. The other is how to really be an active vocal participant. And to stay informed, get involved in industry group memberships, right? American Bankers Association, you can become an associate member. Every state has its own banking group. There are specialty areas for electronic payments, for deposits, for credit, for AML, right? There are fintech specific groups, right? And all of these groups have ins with the regulators. They have an ear. They have the regulators' ears. They have folks on the Hill, both at federal and state level, right? The legislators. They can get you in touch. All of these groups have working groups, right? Where they're going to develop and present recommended industry best practices to regulators and to legislatures. And you want to be part of that. You want to have your voice heard, have your concerns heard. And if nothing else, if you are the outlier with everyone else in that group, then it could be that you're brilliant and no one's thought of it that way. Or maybe you're an outlier because you haven't thought of all of the other risks that have to be managed around that specific area. And so it's a good way to sort of understand perspectives. Another way is to monitor committee hearings and meetings. You can do this with listservs. You can do this with vendor. There are several vendor products that do that out there. Or you could do this with consultants, right? And the thought process here is to understand sort of which way the wind is blowing with respect to what is giving people heartburn, what might end up resulting in new guidance, or what might end up resulting into new laws and regs. I can tell you that for the last 6 months of 2021, every committee and subcommittee for House Finance and Senate Banking Committee, there were discussions that ranged from BAS banking is the equivalent of rent-a-bin, and we know how regulators feel about that, to how do we put frameworks around this. So again, just understanding where things are at then also provides you with an opportunity to decide, do I want to reach out, right? Do I want to have a conversation with a regulator? All of the federal banking agencies have an Office of Innovation now, and they host office hours. And you can have a conversation with them, right? And the way I used to say it at the OCC is within the cone of silence, right? I'm going to come to you with a hypothetical, and you tell me if we have the right risk management framework around it. And the OCC will say, that's a great start. Here's some of the other things I would do if I had that program. None of this would be in writing, but it's a way to get some answers. Okay? We talked about monitoring enforcement actions, and then again, anytime there's going to be a material change to existing law or implementing regulation, there will be a notice of proposed rulemaking, right? Or an advanced notice of proposed rulemaking. Read them and comment. Understand that your comments will be public, right? And they will be published. But if you have a significant viewpoint and you want to make sure that you're influencing that decision, make sure you're heard. And then just work with your sponsor banks, right? We talked about 6 years ago, there were 3 banks that did this and provided sponsorship programs. And now, 100, 200. And some of them are just sort of putting their toe in the water, and they've always sort of been in this banking world, and they don't have the same innovative or agile thought process, right? Because they didn't have to. And so find a way for you guys to meet in the middle, right? Work with them. Explain to them how what you do is in this way similar to what the bank does, and how in this way what you do is different, right? And part of that is understanding how you're going to manage the risk, right? I think a really good example is if a bank is looking to vet a fintech and one of the areas is on information security protocols. I can't tell you how many times I've gotten the question, where are your CCTV cameras? Why don't you have CCTV cameras? And getting dinged on their initial scoring system for that. And we would come back and we would say, because we don't have a server room. I don't need CCTV cameras. But I have one floor that is locked and restricted access, key card only. Everything on this one computer is audited. Everything over here is audited. And it's just having that conversation with those risk assessors at that financial institution so that they can understand that we understand the risk. We are just managing it in a different way because we've implemented the program in a different way. Okay? And then at the end of the day, engage the right folks, right? Consultants, the right inside or outside counsel, because there is a lot of gray space here where the regs have not caught up, and also intentionally because the regs and guidance is intentionally not super prescriptive in most areas, so that there is some growth potential. But, don't guess. If you really can't track the intent of the reg or other examples that you've seen or best practices out there, not from other fintechs, but from the regulators or other oversight authorities, don't guess. Engage with someone that can do a legal analysis for you, that can look at case law for you, right? That has seen how things have been handled in other areas. And you know what? That's just sort of quick and dirty as to how you can influence as a fintech the laws and the rules and the regulations and the guidance that you are going to be subject to now that you have decided to participate in this space. So we do have a few minutes if there's any questions. If not, see? They were paying attention. I watched them though. So.
Well, I'll ask a question then.
Uh-oh.
I can't think anything more exciting than monitoring all those goings on the legislation. Are there particular types, particular legislators specifically that are overseeing this that folks should spend time with, or at least?
Yeah, I would definitely whatever state that you're headquartered in, or if you have a big hub, whatever banking or finance committees, but House and Senate Finance and Banking Committee, and then their subcommittees. They have digital asset subcommittees. They have fintech subcommittees. One even has a banking as a service subcommittee now. So not all of them, but I would start with banking and finance committees, and then just sort of work your way down into the subcommittees that make sense there, and that's probably where you can focus your time and your energy with. Yeah. Travis, did you have a question? Well, you raised your hand. I didn't know if you were just being polite or not. Uh-oh.
So, you talk a lot about if you don't, as a fintech, if you don't provide what you're doing, they're going to tell you what to do. And from a personal experience in dealing with a lot of young fast banks that are just getting started, most of the time they won't tell you. They don't know what they're doing either because they're getting started. And so you don't get that what to do. A lot of fintechs tend to go, just tell me what to do, I'll do it. Right? So
Yeah.
What happens when you run into situations like that, and how do you find out what you should be doing if your bank isn't forthcoming?
I mean, it's a good question. And honestly, and this is not a plug for me as a consultant or me as a co-founder of Balance Trust, but at that point, you should reach out to someone who has sort of, this is not their first rodeo, right? To understand what that program should look like. Because the other problem that you run into is even if you ask the bank, what should I do? And they say this. Well, that works for that bank. But now you have a concentration risk. And you need more sponsor banks to make sure so that if something should happen, that bank decides to get out of that business, BAS altogether, or payments, or those specific types of payments, or they get a violation, or they get an enforcement action, and their regulator's like, that program is going to cease and desist, no more new customers, no more new transactions until you get that shored up. Or it's a pricing issue, right? So you're going to want additional banks. If you build your program to that bank, then what are you going to do when you get to this bank? Because this bank you're going to have 80% crossover, but this bank's going to want to do something slightly different. So you really want to have your program set up first that you think is compliant with the laws and the regs, and that you can explain that. And to do that, if you don't have someone on staff, then you should bring in someone that has some experience, yeah.
We have a great example of that with our experience with the previous partners we were working with that walked us through the flow of funds, whole compliance package, vetted it with their sponsor bank, assuming and then they went belly up, had their charter pulled about it, and when we tried to engage with another company that does that similar work, they essentially threw the whole thing out and started from scratch.
Right, right. Yeah. Yeah, so trying to tailor to one bank is, sorry, that one bank, but that's not what you should be trying to do as a fintech. No. Great. Yes.
I will ask one more question, and I'm going to ask Corbin. So, what happens when, you're still at the point in fintech where you're trying to figure out, well, am I really regulated? And now I know the fin is part of the tech, I get that part, but if you are not in the flow of funds, and you're not touching money, but you're just software that's facilitating it, how does that associate with banking regulation? Because, hey, I'm just helping things happen, moving, I'm not touching, I'm just making money off of it.
That's a great question, and you would think that you're not in the flow of funds. And while you may not touch any of those specific monies, right, you're in the flow of data. You're in the flow of authorizations. You're in the flow of disclosures. You're in the flow of a lot of other things that accompany the actual monies, the actual funds, right? And so that's what you have to look at within the terms of service, within your contract between the sponsor bank and yourself, or the aggregator and yourself, and what is it that you're responsible for. And so while the flow of funds may get you out of certain things like money transfer licenses or needing a bank sponsor for ACH rails or a variety of other things, but if you are the entity that has any touch to sensitive data, right, personal data or financial data that accompanies those funds, or you're obligated to get ACH authorization for a debit, right? If you're part of the support, tier 1 or tier 2 support for any disputes, any complaints, then you fall under this umbrella. Of those 44 laws and regs, maybe it has whittled down to a lot fewer, but it doesn't get you out of it. Great question, yeah.
I really appreciate the distinction you're making between following into compliance and following regulations and policies, and actually whether or not you are required to hold a license that's specific to what you're trying to do. We've run into similar sort of situations with the flow of funds question. It's been a little bit of a struggle trying to figure out what our actual requirements are.
Mm-hmm. Yeah, I mean, and that's the catch-22 to this, right? Is that generally there isn't a separation, but one of the things that I would highly recommend when you're building out your program is that you have a funds flow diagram and a data flow diagram, and then where do you sit in both of those, right? Because depending on where you sit in those that's going to directly inform what laws and regs are applicable to you, whether or not you need specific licenses or charters, whether or not you need an agent relationship with a bank, a sponsorship relationship with a bank, or you don't. And it's also going to have a big impact on the level of liability that you're going to hold. So yeah, so those are things. Any other questions? All right, well, remember the ex-regulator gave you back time.